Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Edward Smith, asset allocation strategist for Rathbones. Hi Edward.
Hello.
So we've had a lot of news this week about the Hong Kong currency. What's the latest?
Well, it's very interesting that for the first time since the Asian financial crisis in the late 1990s, currency traders are speculating that the Hong Kong dollar may have to come off the dollar peg, or at least adjust the peg. Now, that's a pretty major development. It's been very stable for, almost 20 years now. And now we're seeing this speculation that relationship might have to come to an end.
And what does that mean for the future of the Hong Kong dollar?
Well, we think that speculation is rather overdone. The Hong Kong Monetary Authority, who control the exchange rate regime, they're adamant that the US dollar peg remains right for them. Economists at the IMF backed them up this week in their latest report. And we went and saw the Hong Kong Monetary Authority back in October, and for what it's worth, we agree with them as well. I think there are two things. Firstly, Hong Kong is important as a centre of intermediation. It intermediates financial flows between the West and China, intermediates trade servicing and shipping. And all of that means that their clients don't want them to introduce yet another currency to add to their headache of hedging, asset liability management, all of that. So we don't think it would ever go free floating. Now, should it become pegged to the Chinese RMB at some stage? That's a more interesting question. But at the moment, it appears that the US and the Western business cycle still is the dominant force on the Hong Kong business cycle. So at the moment, it's still appropriate to be pegged to the dollar.
I mean, this raises questions about the future of Hong Kong in general, doesn't it? I mean, you've mentioned there all the reasons why Hong Kong is important internationally, but those reasons, of course, with technology, with the advancement of China's attitude towards doing more business globally, things like the Hong Kong-Shanghai Connect, there's rumours in China that is just the first of many connects of the Shanghai Composite with more liquid, more developed markets. If China builds those bridges outside of Asia, it does call into question the future of Hong Kong and what Hong Kong will represent.
Absolutely right. And I'm sure lots of people in London and the British government would love London to become a centre of RMB and Chinese stock market trading like Hong Kong. I think what's important for Hong Kong is that they really knuckle down and assert themselves as the go-to administrative hub in the Asian region, not just for flows into China, but flows anywhere in Asia. If they become the trustworthy, credible centre with a legal system that everyone understands, then they should be able to still play an important role, even if China does start to take on a lot of that overseas investment intermediation itself. I cut out the middleman. Just if you want to be in China, go direct to China. I think that will happen, but we've got a long way to go before we get there. China is only just starting to open up its capital accounts. From my assessment is that Beijing still wants its hands firmly on the levers of the economy, and I think that's going to mean a very controlled number of external relationships, and I think it's still in their interest to funnel it through Hong Kong. But longer term, it may be difficult if Hong Kong doesn't assert itself as that sort of trustworthy centre.
Edward, thank you very much.
Pleasure.
This is Emma Wall from Morningstar. Thank you for watching.